Hey folks, this is Tradytics AI. In this video, we are going to talk about how you can use our live options flow tool to gauge market sentiment and anticipate price movements. Before we begin, it is important to mention that analyzing options flow is an art, not a science. Therefore, it is always better to couple it with your own research and judgment. For the purpose of this video, we are going to take a look at CrowdStrike, which is a cybersecurity company. The ticker name is CRWD. This stock has moved about $10 this week. Let us see if we would have been able to catch the up move by looking at options flow for Monday, December 21st. On the tool, the first thing you can see are the wide variety of filters that we have. These let you extract the type of information you want. For instance, you can filter by calls, puts, million-dollar orders, volume greater than open interest, and more. The first column you see is our dashboard, which lets you expand and look at more information about each contract. It shows you how much money has been spent on the contract today and the intraday stock price for the current day. The next interesting column is the sentiment column. The way we measure sentiment is by simply looking at whether the contract was traded at the bid or ask. If a contract is traded between bid and ask, its sentiment will be neutral and nothing will be shown in this column. On the call side, if a contract is traded at ask or above ask, that means someone has bought the call contract, which is why the sentiment will be positive. In contrast, if a call contract is sold, it will probably be sold at the bid price, which will show a negative sentiment. The opposite happens with puts, where the sentiment is bullish if the put contract is sold and bearish if it is bought. Looking at expiration dates, we can see that most of the money being spent right now is on very short-term calls. That can sometimes indicate a short-term bullish movement, which is exactly what we got with CRWD in the week of December 21st. Most of the other columns are self-explanatory. Bid-ask is the contract price, and premiums is the total money spent on this contract in the trade. Next up are the label buttons that match the color of the filter buttons. For instance, the purple label button actually means the volume is greater than open interest. If you look at the same filter, you will see the same colors. Let us just spend a minute going over the options flow for the entire day. As we are going through it, we can see that a large number of contracts were calls. Puts were in a very small quantity, which can again indicate bullish sentiment. To confirm that sentiment, we can see that many of the calls were actually traded at ask or above ask. There were only 2 call contracts that were sold below bid, while the calls bought above ask were many. There were also many orders where volume was greater than open interest. That shows the confidence traders have in the bullish movement of the stock. Let us now take a quick look at the stock price. This options flow was from Monday, December 21st. We can see that the stock indeed rallied quite well in the next 2 to 3 days. From $210, it ended up closing at about $221 on Thursday, December 24th. Let's quickly take a look at another stock, Riot. On December 21st, this did not have a lot of options flow, but whatever it had, it was mostly all calls. Even some of the puts that were there were actually sold instead of bought. This led to a huge spike in price in the next 2 to 3 days. That is it, folks. This was just a quick example on how to use live options flow to gauge market sentiment. Please spend some time with this tool and backtest your strategies by using historical data. Options flow is an extremely useful tool in the arsenal of a trader. We hope you will be using it in the future to improve your trading.